Are live. We have a 1320 call on Amazon. It's a bid and ask. It's a market maker app at IB. You can see all the various different exchanges for direct access trading. It's 2590 by 2760. Now, notice, yes, it's live. It's here. It's now. It's Google. Google's printing at 1342 by 1343. You got a $20 move off of the low. You got a 25.90. Now, in the IR, knowing when to sell the call options is when we were up here at 100 IR, which we were. It's there in the info panel. At that time, the ask was up around 31.50. Now, the intraday high of that option is 28.80 and the intraday low is at 17.85. This is the current bid and the ask. Now, as a market maker, how do I take control? I'm Pearl here at 2050. Now, the rest of the market makers in the pit are going to be watching me down here. Now, the only way that I could influence the other market makers as a market maker is when that IR drops. That's going to be the key in the app because this is directly tied to the bid. And the 1/16th value today, each line is $3.58 per 16th. And they're mathematically 100%. Now, options will make an intraday high as this did. When the IR is up at 100, that is when you're selling because you're selling out up at the high of the day of the contract, and they are going to drop considerably in value. So when the intraday range in Panther goes lower, right now it's 25.90 by 27.50. Now these guys are lined. I'm Pearl. I'm Pearl here. I'm a market maker. I'm $8 difference. I'm on the high end here to influence the price. I'm on the low end to go ahead and take them to the woodshed. But how do I do that? If the IR goes up, if I have 5 contracts intraday, I'm always going to be getting out on half of them up at the high. And then I do have the luxury, if it does pull back 2 teenies, which is going to be about $7 and something, it's going to change the bid and the ask are going to drop. So if the IR goes lower, that bid is going to drop. Okay? I've got everyone, I'm Pearl. I was 27.80 on the high side. No one was there. Now they're all there. They're all there. They were never there before. Now they've all come down. And I'm still here. I'm still on the high side. I'm still, look at me going up over here. But I'm not changing nothing over here at 20.5. But look at that. I'm dispatching that live. Now, let's see what happens with the IR. If the IR goes up in value, then the ask will go higher automatically. There will be no lag over here. Now, the public never knows how to get in that wholesale bid and ask range. When you're making a market and you're taking that money off the table, you have to know how to get out. And you have to execute within a millisecond. Because if you don't, well, you're not going to get money. You're not going to get paid. Because it'll go right by you, the price will go by you, you'll chase it to get out at a lower price. All kinds of weird things. So, once again, we're going to get back to that bid, taking control of the market, being below everybody. Now they're all lined at 26 right here on the bid. 20.50 Pearl, 30.60 over here. Pearl, me, going higher. What am I doing? I'm influencing because being on both sides of the markets for the call side, the calls can go higher, but you never, ever stop taking profits at the high of the day. Rule number 1. And then holding that pullback, and then with the IR would have to go much higher for that ask to go higher. And we're doing it live, and it's right here, right now. It's a 320 call. So why do we have a $15.65 range? It's because the call contract is what? It's $25 in the money. Oh, yeah, it is. It's $25 in the money. I'm at an 85 IR. That IR does not go higher. You will not go higher on the ask. It's here, it's live, you can see it. The bids are down here. If we go below 80, then the bids will drop immediately. There will be no lag price in the pit, but who controls it and who's down below the marketplace? We are. Pearl, there's all different kinds of exchanges. We teach you how to use the ECNs in direct access trading. That's what we do. So that you can't do that at TD Ameritrade or E-Trade or wherever Screw Trade because you don't have the routes. And I know you don't. So anyway, let's just go ahead and focus on the values here, knowing when to sell out when the IR is at 100, understanding if that does drop, then the bids drop in value. So remember, it's 2670 by 28, 2920. There you go. You can see how it ticked up and the ask went higher. The bids will come up as well. Now, when you're holding the other half and we're getting ready to go back up and there's still, let's say you only had 3 contracts and you sold 2 of them at the highs on the first pass like you should do. Then you still have one. We're in it. Let's go ahead and blow up Panther. Bada bing. There's Panther. Each line is 358. It's an 86 IR. So let's go ahead and pull this back over here. Hold on one moment. Here we are. Now, watch the ask and the IR. When that goes higher, that will go up higher. But nobody has bought the highs at all. And look at the bid. The public doesn't know what to do when they have a bid and ask range this wide. They have no clue where to go ahead. And how do I get that entry? And then what directional price movement are we going to continue to roll with? I know it, you know it, but you can put it behind you. This is the reality. Knowing when to exit is the hardest thing for people. Why? If 2740 by 2910, you're still in the other contract you own, and you want to get somebody to buy this from you on the highs, then that IR has to go your way. If that IR goes up, then the bids are going to run up. And then if I want to jump out, I can throw an offer lower, influence it, and I can contract. I could drop it to 29.20 and see if he would buy it. That's 80 cents below it. So there are different ways to manipulate it back to knowing when to exit. Why is it that 99% of the people can never get out at the right time in an option making a market like you see here now? When you're getting an ask at an intraday high right now with a 91 IR, now they're going to drop. That IR goes down, then that ask is going down, and this is going down. So you could see the difference at 2760 by 2980. How are you going to get these people to buy what you want them to pay for it? And only we can tell you how to do that, and we will. And so that's going to be the other part of this is how do I contract the bid and ask and get this trigger this side to take my order? Yeah, and that's why you get rich, because you got to get somebody to take it, and you got to trick them into buying it from you. And you have to do it with this IR. It just dropped to 88. Watch the bids drop. See that? Watch the ask drop. Watch that drop. They're $2 wide. $2 wide. Time period. 10:50 a.m. Pacific Standard Time. 27:10, 28:90. Why? IR dropped. Bid dropped. Ask dropped. Bids go down when that go. Ooh, 87. Look at that bid drop. It's live. It's here. Now, I'm still down here at 20.5. Now, I make my adjustments over here, but I'm still on the high end manipulating the ask because I'm on both sides. And so can you be. So 88 IR, lower to below 85. This is going to drop. And the high of the day is still 28.80. And they're right here, right now, at this time frame in the pit. And they lose value below 85 IR. They go up in value if the IR was to go up like it did at 90. I'm going to go ahead and put the tape on pause for this very moment at 9 minutes into the price discovery. And then, instead of letting them control you, is how you are in control, how you take control of them, the other market makers. You can only do it mathematically. You can only do it mathematically. I can't ever emphasize it enough to you. I'm at the 86 IR. Watch the bids drop when you go below 85. And it won't lag price here. That's the beautiful thing about Panther. And so knowing when to exit is the key. And people don't know. The wider the bid and ask gets, then the option trader fumbles around and then ends up selling at a lower price. And you know what I'm talking about because a lot of you have been down that road, if not all of you. So the thing about it is at 26.50, it's dropping now. Watch the bid drop when the II goes down. There it is, 26.40 by 27.8. Ooh, ooh, ooh. Look at that. Slide the bid. There it is, 25.80. Watch the bids go. Ooh, watch that IR drop down to 80. Look at that live bid drop by 27.40 on the ass. And if you don't know how to exit, you don't get out up there to high price. And this is live in front of your face. There's no guessing. It's mathematical. We're market makers in the pit. Wake up. 26.30 by 27.90. Now what's he going to do? Stumble out at the low price? What's he going to do with the bid and ask range? What's he going to do? If you go back below 75, now these get down to 23.50, and they even go lower when that happens. So we're going to conclude that bid and ask range, and we're going to do it here right now, 11.42 into the price range. Google 13.20 call in the money. Was $25 in the money.